Good morning, everybody. Happy Friday.
It is Friday.
Good morning to you too.
Thank you. Should be an exciting day.
Always is.
Yes, it is. Oh,
So, okay. Well, let's see what we got here. 27. We'll give it a 15 more seconds or so.
okay.
So, had good weather here yesterday. 84, sunny. It's like summer.
Oh, well, it was actually a little chilly here in Texas,
What was it?
which was nice.
92? 92?
It was actually in the mid 80s.
Oh, nice.
I was actually wearing jeans yesterday. So,
How's the
Wow.
mosquitoes in Texas? Did you see any mosquitoes?
oh, I haven't seen many mosquitoes, but it's the flies.
And the roaches?
I haven't seen many of those.
When I lived down there
Uh,
was ants. Ants were big. And fire ants
yeah.
and all that.
Yes, ants are a problem here.
Yeah.
Do not leave anything out.
Yep. You don't want to step on a
Oh,
fire ant hole either.
no, you don't.
Okay,
Right,
doke.
you ready to get going?
Let's rock and roll. So this morning the markets were down a couple hundred points, and now they've come back. Uh, and you've seen yesterday the markets dumped, and with some regional bank issues out there, and the Dow went down 0.65, the Nasdaq 0.47, S&P down 0.63%, and there were two banks in the regional area. I mean, the big banks have come out and they're talking about, they don't have as much credit exposure, but they're mostly investment banks and dealing corporations and other things, even though they do have some exposure. But the regional banks, uh, they lend more to people like us and consumers and auto loans and other things. But two of them came out yesterday, Zion's Bank and Western Alliance Bank. uh, Zeihan announced a $50 million charge off. That means it's a loss that's they're not going to recover. It is related to two loans from its California Bank and Trust Division. It cited apparent misrepresentations and contractual defaults by the borrowers, meaning they believe the borrowers committed fraud by lying about what was backing the loan. Zion stock plummeted over 11% as investors realized that fraud is a bad loan quality, could be hidden on balance sheets as other banks as well. And then Western Alliance came out when they disclosed they had to file a lawsuit against a borrower alleging fraud. The bank accused the borrower of failing to provide proper collateral in a first-person lien, which was the strongest legal claim to that collateral. Their stock dropped by over 10%, and that caused other stocks in the regionals to come down. So that originally, this morning at 4:30 and 5 when I got up and looked, the markets were down. And then you've had some banks come out, Truist and Fifth Third Bank and Huntington Bank, and they're either not reporting what their credit losses are, or they're saying they're about the same to just a little bit higher. So maybe that brought the market back a little bit. But he also had uh, Jamie Dimon came out yesterday. He was talking about, basically the tricolor in the First Brand's bankruptcies. In First Brand bankruptcy was tied in Jeffries as their bank, and they were down yesterday too, because of a fund managed by Jeffries held about 715 million in receivables, which is unpaid invoices from auto parts supplier First Brands, which declared bankruptcy, and $2 billion has just vanished out of that whole deal. So Jeffries fell about 9%. Jamie Dimon was talking, and the quote that everyone was talking about was, "When you see one cockroach, there are probably more." And so that was going around the financial markets. So, when the markets see these cockroaches appear, and it's fraud at one bank, they assume that there could be fraud at other banks. And so, we had a sector-wide drop in the KRE, which was the regional bank, and we'll look at the charts. And that causes banks to tighten up their lending standards. And it's harder and more expensive for companies and individuals to get loans and that slows the overall economy. So that just all kind of rolled through the system yesterday. Uh, so we're no longer worried about just high interest rates. There's now worried about, bad loans, potential fraud within the banking system, uh, and credit default. So we've been talking about this for a while. What's really in the banks, and we've been talking about deficiencies and delinquencies in credit cards and auto loans and the home loans, and so it shouldn't be a surprise to any of us that we're finding these, but it kind of brought the market down, but now you kind of see it shaking it off just a little bit. So we'll move on. Get over here. So we had a little bit of activity yesterday, mostly before noon, on the my system's a little slow here. Hold on. Get this. You guys still there?
Yeah.
Can you hear me? Okay, I can't see
Yeah.
you guys, so I'm trying to
Yeah,
get this
absolutely.
pulled up. Okay, here we go. Finally, it's really slow. Okay, share this. It'll come up for me. Here we go. Sorry, my system, I don't know why it's so slow. Must be sunspots. Okay, here we go. So, we've been out. Just come on. There we go. We've been out of Floor. We've been out of Lamb. We've been out of Generac. Okay, and we're up on those. Still in Biorats. Okay, we're still up on that, almost 5%. And got out of Consolidated Ed yesterday. It hit a sell limit. Got out at a little under 0.5%. So the only one we're back in is really Biorad on the watch list. So I mean, for the week, just from where we put it in, I didn't even go and try to get a better price. Just where we put it on as far as being on the watch list, 100 shares on a paper trade would have yielded today, about $4,000. Okay, let me move down. My system is really slow. It's not moving me down. Okay, now it's moving me down. Okay, now there we go. Get this down a little bit. You guys see this?
Yeah.
Yes.
Still? Okay. So Coca-Cola, still in on Coca-Cola, kind of popped back for us a little bit, up about 82%. We're out of these two. Those were losses. Okay, 2% rule kicked in, got out. Waters Corporation got out of that yesterday. Was about 1.5%. Still in Sprouts. Okay, that was a good one. Still 4.65. Got out of Jack Henry yesterday. So we're still in Dr. Pepper on the under the 200 list. And this would have got you about $829 so far, even with the two losses. So, there's always trades out there somewhere. Not all of them work, as you can see. But you got to, have a trading plan. And this one, I didn't even try to get better prices. I just went off of what we put it on when we went on the list, and turned out pretty good. We'll probably be out of these, I would imagine, today. We'll see how the market goes. If it kicks us out, I don't care to hold positions over the weekend. I will. But with this regional banking, I'm just going to see what happens today, and if that gets shaken out a little bit, because I'm sure there were plenty of meetings last night in some of these banks and financial companies to see how much exposure they have on their books to some of this debt that's out there, and we'll see what happens later on, but we might not be out of this one yet. So let's go take a look at some charts, if my system will work so far. Here we go. And here we go. This is the Dow, and Dow's up a little bit now. It was this morning. You can see it was going to open, quite a bit lower, right about where it closed, but going to open a little bit higher. We're still, sideways, and we're still right along the resistance here. The oscillators are still down, in the negative area. Let's see if this will slide around. Really slow today. Huh. All right. My system's tired. The SPY looks pretty much the same. once it pops up here, if it does.
If you want to reboot your system and all, jump in, you come jump back on.
Let me see how this goes. Okay, here's the SPY. Let me see if I can muddle through it. If I can't get it going, then we'll do that for it. So here's the SPY. You can see where equal, same on that, underneath the 9. Oscillators are still down on the SPY. Okay, it looks like it's speeding up a little bit here. Kind of. Kind of not.
Define speed.
Well, not on, it's not my system today.
Not the Roadrunner hour.
No, I don't know. I got satellite out here. It's usually really good, but today it's a little slow. The cues, same thing, sideways. You can see in Bollinger Band sideways also. Oscillators down, basically. And I'm going to try one more. If it doesn't work, I'm going to pop off and I'll have Trent get on. Let's see how long. Oh, here we go. Gold. Okay. Gold still shooting up there, and we're going to open up higher. You know, it's right along that Bollinger Band. The debasement trade, they call it, you know, with the dollar is getting weaker. They're trying to get it weaker, and countries and people and other investors are moving to harder assets, which is gold, silver, you know, whatever you can actually own, land, real estate. Silver is the same way. Come on, silver. IO silver. Here we go. So silver again, running right up along the Bollinger Band. We're going to open right about where we closed on silver. This over. Okay. What really took a beating was Bitcoin. Let me show you that, but it kind of bounced off, but it went down to almost the $100,000 level. Come on. There we go. See here we're at 105. Here's 100. We did it last weekend, so it's come down. It's hit this resistance level at the 105 level, and it's playing between that. But you can see it's under the 200. So we can't get a close on that, you know, and bounce back up. You know, that's not a good sign for that. And the oscillators don't look very good on Bitcoin either. So again, just a continuation of what happened, you know, last weekend. Just continue to, you know, see a exit out of Bitcoin at this point. I'm going to do a couple. I'm going to do bio. I'm going to go in to do some of the ones.
Mark, real quick. What do you use to buy Bitcoin?
What do I use?
Yeah.
I have a Coinbase account.
Just Coinbase? Okay.
And I have a Fidelity account that you can buy Bitcoin both on a regular crypto account and on an IRA, a Roth IRA. On those accounts, you can't take custody of your Bitcoin like you can in Coinbase.
Right.
In Coinbase, you can take it off, put it on a wallet, take it with you, transfer it around. In Fidelity, right now you can't. If you sell it, you just sell it and you get cash back. You can't take it out, but you own that amount of crypto or Bitcoin or Ethereum in Fidelity, but you just cannot, you know, take it out like you can on Coinbase.
Yeah, I got a feeling I'm going to have to add a Fidelity account to mine.
If you do, you have to have for my Roth, I have a Roth account with Fidelity. And so you open up a Roth crypto account, and then you transfer out of your Fidelity Roth account, your regular account, into that. So whatever your contribution is every year into your Roth based on your age, you have to put it in your Roth and then transfer it over. Then they have a regular account that's just regular, and you would have to have, you know, an investment account where you have money and then you transfer it into your Roth, not in your regular crypto account. You can buy Bitcoin or Ethereum there too.
Gotcha.
So
Thank you.
that's helpful.
Fidelity will not do
bio.
all states. Fidelity, they won't allow it in Connecticut for some reason. I don't know why.
Yeah,
not all states.
Some states are that way. Yeah, you're right, Paul. Yep. So
What are
depending
the-
on your state, go ahead.
What are the tax implications of opening that account and transferring it in and out of your Roth account? Is
None.
it still, your gains are not taxable?
Right.
There's no taxes on
Because it's a
crypto.
Roth. So you've already paid
Yeah,
You've
as
already
long as
paid your
it's a
taxes.
Roth, it's after tax.
right.
Okay, so that when you're talking about opening a crypto account, that's within your Roth account, is it?
Yeah, you fund it out of your Roth account, your regular Roth account. You fund your Roth crypto account.
Okay,
So it's not like you could have two accounts. Let's say you can put 8,000 a year. You're old enough, you can do 8,000 a year. Uh, you can't do 8,000 in both of those accounts. You put 8,000 in your regular Roth account, and then you can transfer that over to your crypto if you want.
right.
Yeah. And they're very helpful. You can call up Fidelity and they'll help you with all that. They're very helpful. So, bio, we got in right here, as you can see, and we're still rolling up. It kind of went up and it hit sell order resistance and also the upper Bollinger Band. So we're still in that one, and we're up about almost 5%. Ads. This one, I think it got popped out here. Here we go. And then, yeah, Ed popped out, came up, hit right up. You can see we crossed over. The Bollinger started rolling over, and I just put in sells right here along the top just in case it rolled up, and it did. It opened up here, and it went up to the sell orders, and then came back down. You can see now the resistance level has popped down here. It used to be up here, now it's back down. So we got out of that one pretty good with about 0.41%. If you look at our under the 200s, I can get it to go. Just limping my way through here, but I'm going to get done ahead of time. Waters came up, popped out. You just put in here's where we started yesterday. It came, and so I just came and put in sells right where we saw that above, and we were kind of hugging the resistance level. The 9 came up, started rolling over, it kind of went up and popped that for about 1.5 points. Sprouts kind of rolled over a little bit on Sprouts. Farmers market sideways, but still, right around the 20 and right around the support level. So we're in at this level. I'd come back. I'd put in, for me, where I'd want to stop, stop limit right in this area so you could keep your profits. But we do have the 9 crossing over, so there is opportunity for this to keep rolling up if the market goes up today and we catch that bid. But see, the oscillators are still good, so that's why we're still in, and that's why I wouldn't sell at this level. I would try to give it a little room to run up, but try to keep your profit before the weekend on Sprouts. And we're up about 4.5% on that. JKHY. I'm on JK. There we go. This one came down and popped out at about 0.79%. Here was where we were. It kind of came down, put it right at this level, and popped out of that one. So that one wasn't, all that great, but it was still under 1%. And then KDP, still in that one. This is Dr. Pepper. And it's coming slowly. Come on, Dr. Pepper. Dr. Pepper.
I may get into
There we
that
go.
one just for fun.
This one's a nice little swing. It's come down. We popped in, as it got above, and it's just rolling. Now you're outside of the Bollinger Band. The oscillators are still good. This, probably could still roll or come back in that Bollinger Band, but you got some room up to the resistance at 22.66. We got sell orders, and then watch out for the 50 above that. But it's got a nice little swing on it, and right now we're still in it. That one's up about almost 5% since we put it on the list. So not doing pretty good on those lists. So use your trading plan. I do want to show you a few of these regional banks, why we talked about them. I can get it to do it. Here we go.
Don't show Zeihan.
Yeah, that's what's coming up. Well, what's coming up? There it is. Yeah, look at that. Zeihan. Let's look at WAC. WAC, this is the other one that had some issues down below the 200 here on Zeihan. Still waiting. Come on.
But isn't Zion something to actually just keep a watch on over a couple days? Because if it drops that low, it can often bounce back up.
I don't think it's going to with these issues that it has with $50 million charge-offs right now.
Oh, okay.
Yeah, we just went over that. This and this other Western Alliance Bank, you're starting to see some credit issues here. Okay, and here's the other one that had issues with fraud, potential fraud, and you can see what happened to that yesterday. But it almost looks like somebody might have known a little bit, and they were playing around the 200, then boom, and that. And then Jeffries, of course, was the other one. This one's involved in the bankruptcy and potential fraud of First Brands, and this started back in here, when First Brand started coming up. So you see what's happening to these regional banks, and you can go to the regional bank ETF and see how it just got smashed yesterday too. And the top banks in that particular like Cade.
So I was reading on these regional banks, a lot of these losses were deals that were taken off the balance sheet. And not only taken off the balance sheet, but they're related to the commercial real estate that has fallen apart almost 2 years ago. And now it's showing up because the money's missing.
Yep.
And they have to answer to the auditors. So, surprise.
Yeah, I mean, look at these are all regional banks while you're talking. I'm putting up, and they're all just being crushed. And you're right, Bob. The commercial real estate, there's over $1 trillion of money in commercial real estate is going to have to be refinanced this year. And so I think as they're rolling through these, they're starting to find some of this, but they're also finding fraud in the collateral that got put up for these loans.
I'm sure there are lies, like always, right?
Well, and that's what Jamie Dimon was talking about, cockroaches. You just don't have one. If you have one, you got more,
You get a bowl of them.
So, it looks like the market's kind of shredding it off a little bit because some of these other regionals came out and didn't mention much. But, over the weekend, something could come out. So watch out for weekend risk. But this is, we talked about this. This started when Trent brought up Tricolor about a month ago, and then we had First Brands drop off. And there's fraud in both of those. They're investigating fraud.
Yeah, but because that was immediate, Chapter 7. That's just cutthroat, right?
Yeah.
Liquidate all my assets and pay it off to my creditors. That's what that is. But don't forget too, all the mortgages. Those mortgages are still being held by the banks. They are not shedding those things so quickly. It's still on their profit and loss. It didn't get moved to their balance sheets yet.
Yeah, the bigger thing that we can't and typically don't see because they're typically not public is private equity. These guys, we saw it. I think I brought it up in March, April, when what was it? The three surf brand retailers went belly up because private equity basically bankrupt them because of how they structure these deals where they come in, they buy them up, they leverage them up. You saw Joanne Fabrics, you've seen it what Forever 21 did. A lot of these retailers who are related to private equity, and we don't see their books, we don't see their loans because they're privately held. And so in what we've had, the wave of private equity has been, you had the established, the guys who do manage money well or manage private equity well, came in the market after 2009. they built their businesses, they leveraged up, they do distributions as funds mature, and then you got everybody else who comes in, every Tom, Dick, and Harry who says, "Hey, I can do this too," and they leverage up, but they don't manage their money right. They don't manage their businesses right, and they leverage these businesses up after they buy them, strip them down to nothing, and then fail them. And I think that is more, in my opinion, that is the bigger toppling because of who these guys are related to or who they're borrowing money from. And they're borrowing money from big banks, regional banks, this kind of thing. And I think we're starting to see that starting to roll through slowly. But because we can't see it like a publicly traded company, it all of a sudden just shows up. And I think we're seeing the beginnings of all this starting to happen. And yeah, we may have a bounce in Zion and regional banks, but I really do believe that the consumer is so stretched, so credit, dependent and has become that, and they're not making the money to pay it. And so what do? They just borrow on top of borrowing on top of borrowing, and eventually you can't borrow anymore. And then eventually something cracks. And that's what I think we're
Remember
starting
on
to see.
Yeah, and
Huh?
remember on Tuesday we talked about their strategy extend and pretend these banks have, where they have
Yeah.
these loans that they should foreclose on, but they don't want to foreclose on them, and get them out and expose in their books. So they modify those loans, uh, you know, even more so they're
That's
not
another
on there.
thing
So
they're
they
doing, Mark.
is extend and pretend, and so it keeps it off their balance sheet until it actually goes under. But things aren't getting better.
Exactly. Yeah. So when it moves to the balance sheet, it's bad.
Yeah, and they're trying to keep it off that by extending and pretending, they call it, as a strategy.
Exactly. It just stays on their profit and loss sheet.
Right. Well, that's all I got, Trent. And we can still talk about this,
Okay.
but it's up to you guys. But it's out there and it's something big. So I wouldn't.
Yeah.
Even the XLF, the Financial Services Sector Fund, is down a lot yesterday. So it's not just regional banks; it's all banking systems right now.
Yeah. Well, this is a e-mini futures. This is what we see every morning pre-market. And as you can see today, presently it's at 6,663 on the S&P futures, but you can see it got as low as 6,571 this morning. We're below that flip line of 6,720. So we should anticipate volatile moves throughout the day in the SPX, as well as any underlying position. When I look at the Qs, the triple Qs, this is the ETF. Yesterday we closed below the flip line. That means volatility is higher. It expands. You've got a resistance level up here, a first level resistance level at 620. That seems like a mile away. Whereas your support level here at 690. So we touched upon that on Tuesday, came up, we hit that flip line. We went opened positive, but yet now we're just sitting on it. And yesterday we closed just below it. So we should anticipate more volatility throughout the day in the Nasdaq 100. And then IWM is the Russell 2000. And here we go. Opened up Wednesday, closed above it Wednesday, and then yesterday opened above it with some significant volume, but closed below the flip line of 248, which means there's more volatility and looks to open about 244 today. So we're trading on that trade trend line, that white line there. And so we should anticipate volatility. So if you think about it, large cap, large cap, tech, small cap, you should anticipate volatility and big moves. And I'll give you an example of a big move here. I'll go back to this chart in a second. This is the VIX. This is this morning. The market hadn't even opened up yet. Okay, so we opened at 28.41, which means we were opened in the F bucket. Got as high as 28.99, this morning, as low as 23.43, and right now we sit at 23.98. So we had a massive move in volatility before the market has opened. And so what that tells me is we should anticipate more volatility throughout the day. And so if you get a pop and stocks are up and you got mega triple digit profits, maybe think about taking a little off the table and putting it to the side. Stay in, if it's fundamentally a good company, it doesn't have a lot of credit risk exposure. Um, but I think what this is telling me, this move up since last Friday, I mean, we entered the chop bucket this week and we have seen chop, and now we're seeing um, basically a glimpse of what the F bucket could look like. And if we go back in time a little bit, wow, that just seems really familiar. I mean, here we are back in February 21st. We got Tuesday the 11th, got into the F bucket, actually closed in the F bucket on Monday, the March 10th, popped up again on Tuesday, came back down, went back down in the investable bucket by the 25th, 26th, and then popped back into the chop bucket on March 28th, and then started our move into Liberation Day and the bottoms in April. Just seems really familiar. So when I look at this, depending on where this volatility closes out today, we could enter a declining chop bucket market next week into the investable bucket, and then that would put us in close to the 1st of November, and then who knows from there. So this is what history looks like, and I believe history always repeats itself. When I look at the percentage of stocks above the 50, the 250 and the 20, yesterday we had a continued decline of in the 20, or in the stocks above the 20, by declined another, was that 17%? That's a pretty big chunk from the previous day. We're at 37% of stocks are above the 20, 43% are above the 50, and 54% are above the 200. We had a decline, about 6.85% of stocks over the 200 yesterday. And in the 50, we had 12.68% of stocks declined below the 50. So I mean, those are just not numbers to brush off. So as long as we continue to see this volatility, just be aware things are greatly changing overall. This is the 3-month VIX average, and this is where last week ended. This is where we are this week, or this on the 3-month average. So we're seeing this move back up through this trend line that we saw established way back here, and we're now approaching to where we were back in March. Back in March, we touched upon it in. Sorry, Mark's in the way there. In December. So this is a 3-month average of what this looks like, and I was thinking about this today because I thought of the clip in The Big Short about Mark Baum and some big Bear Stearns investor, and he always goes back to it's risk, it's corruption, it's greed, and that's what drives this. If you looked at the headlines yesterday, it was corruption within Zeihan and what the other bank. And if you go back and look at every one of these big market blowups, it's overextension of credit. It started in 1929 when the introduction of, borrowing to buy a car or to buy products. We got overextended in credit. It blew up. You come into where we are in, since the dot-com boom, overextension, exuberance in, companies that made no money, borrow, 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 crash. Housing, borrow, 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 crash. Now we're back to that. Those words are coming back into the headlines. Borrow, 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 corrupted lending practices. And so you have this environment where, once again, it's a bubble, and maybe it's not AI bubble, but it's a credit bubble. And that is always the foundation for these big market drops. You look at this is Bank of America's high yield index option adjusted spread versus the SPX. The blue line is SPX. If I go back in time, this is this line right here back in the 2007 to 2009. That's the high yield index spread. This is the SPX. We just rinse and repeat in this world when it comes to credit. We are at all-time highs again in SPX. We're at lows again in high yield index option or credit, basically high yield credit. So this is just one thing I'm watching again is like, will we repeat ourselves through again as we have done before? And remember, we're more leveraged up. There is more money in the system today versus 07 through 09 when that all fell apart. We're like 10 times that. So just keep that in mind as you risk manage throughout the day, as you go into next week. It may not be a AI bubble, but it's a credit bubble. And
Yeah,
that
but
we are starting to see cracks in.
there's more money, but there are bigger apples in the bucket.
Yeah. I mean, it's bigger borrowing. It's bigger
Yeah.
leverage.
Hey,
Exactly.
Trent,
And there's more
can you
ways to
show
hide it.
can you show the stocks percentage under the 9 SMA or yeah, I think you showed 20 SMA. Like how many
Yeah,
stocks is it hard to do on your
no, just
I
give me
find
1 second. I'll
okay,
let
sorry.
Mark
I
go
don't
ahead and
yeah, go ahead.
no, you're fine.
Yeah. I just
Yeah,
wanted to see
it's
that. I
a
was
good
curious.
question.
I imagine it's going to be a steeper chart than the 20, Paul, on the
Well,
downward side. We'll see.
I use the 9 and the 5 a real lot, and I tell you, I'm out of a lot of positions now just simply because they crossed. So I'm
Yeah,
just curious what
definitely.
you see.
Yeah, because
Yeah.
they're shorter indicators, so they would be that way. And if you just look at what Trent has from the 200 to the
Looking at
50 to the
this
20, you
building.
can see it.
Yep.
I just got to show you.
Exactly.
This is kind of our news. I saw this. Wednesday's news was Bank of America, Morgan Stanley, blockbuster record quarters. And U.S. banks, Goldman Sachs, blowout quarter. And then this morning's news is bad loans by regional banks should concern us all. Questions now being asked about
What
how the
bank here? I'll
demise of
take it now.
relatively unknown auto
Oh,
parts
really?
suppliers has spread across the global banking and fund
Huh.
management industry, where potentially billions of dollars are entangled in the collapse. So what does that do? I mean, let me show you the chart here. If I can get this to come off, there we go.
So what do the main banks do to the regional banks? Mainly the main banks will not lend to fairly risky loans. And they'll give something, but they won't. They'll move them to the regional banks, and they'll have someone they know or that they're working with, and put their assets into the regional banks. That offers the main banks. That's the game that the Jamie Dimons, J.P. Morgan play, along with all the other big banks. Is
Well, it is.
that's
Jamie, these big banks clean up on these bankruptcies of Silicon Valley. They buy them pennies on the dollar,
Yeah.
all those assets. Yeah.
Yeah, and they
This
come
was-
in
this
later
was
and they
that-
clean it up, right?
Yep. Well, they have the money to do it. It's
Right.
it's like in A Wonderful Life, Mr. Potter trying to buy up poor
Exactly.
the bank building alone, you know.
Exactly.
This was that
Ex-
this was that good news I was showing you on Wednesday and what happened to the financial and this was the bad news that happened, the other day. And so again, um, that news is really moving stuff, but this is the actual XLF, which is the, financial selects fund. This has, banks, it has insurance companies, it has brokerages and all that, and so the regional bank took it down pretty well yesterday. So we'll see how it goes today. Just keep an eye on it because it's good. We talked about how something like that starts and it just cascades into, okay, where did this loan go? Where did that loan go? And they're chasing this money around all these banks. Before you know it, I mean, like True Color, I think had 25,000 creditors. Okay, that's a lot to go find. So anyway,
Cars. They're mostly
So this is
loans for cars.
yeah,
this is a chart of the percentage of stocks above the 5-day average. So yesterday it closed at 46%. Previous day it was up at 47 or 67.85%. The
Dropping.
previous day to that was October 10th, Friday, October 10th. What was that? Only 13.95% of stocks were above the 5, down 61%. So this is, I mean, a
Yeah, it doesn't show me
very
much.
short term. Yeah, it doesn't show you much. It just shows
Yeah.
you how violent it moves and how it can move in a big way. It's, so just, I don't think this is really telling of anything. I think this is more of your trend
just got to
indicator. I
remember,
mean,
yeah,
at least the
it's only
20.
only 9 days of data, 9 points of data.
Yeah.
So you're gonna
So
see it like,
yeah, I think it's you look at the 20, it's telling you it's less and less is above the 20, and it feeds the 50, it feeds the 200. So the one I really would, if you go back and look at February, March, is that 200 period. How many
yeah.
drop below, 50%, or the percentage of 50% below. So, but we're getting to the end of the month. We're getting through this volatile period. What is it they say? 6 months before a market, what, crash, you have all-time highs being achieved or something of that sort in the next 6 months. So if you think it's like this is it, typically what you see is another 6-month run historically until you hit all-time highs and then everything falls apart. And we've seen that over time. So I read where somebody was saying we were basically in October of 99 right now. So that's something to consider, but I think what we're seeing is how fragile markets are and how a headline can cause, a sector to drop as much. And I just go back to all the historical crashes. Where does this start? It starts with credit, and it starts with default rates in credit, and that feeds everything else. So
Was it
Well,
was it September of 2009 when the crash occurred? Was this September?
no, April,
April. Okay.
yeah,
but
because I remember we
October's had its nice shares of crashes. The Great Depression, uh,
yeah, yeah,
financial or not financial crisis. I think it wasn't .com in there in that area. I can't remember, but 87 for sure. It was October.
yeah.
Um,
But yeah, I still think we'll hit 7,000 on the S&P by year's end. You know, I think it'll be,
he says with a smile. Yeah,
I
it's
do,
about. I mean,
but I also think there will be, it'll be we'll see volatility be chopping around this month. We're already seeing it. I think it'll continue. I think there'll be some buying opportunities, but you got to remember, Wall Street's driven by greed. They're driven by money, and they're getting opportunities to buy stuff right now, even though it may be junk. Um, I saw what was Nvidia was down in around 177 right at the flip line this morning, pre-market. It bounced back $3 pre-market. So what that tells me is these guys need to make money, and the next 2 months are going to be bonus months for them. So they're going to take advantage of these volatile markets. And that's where day traders and swing traders, I believe, make money is you want volatility. You don't want just a steady eddy vol mix because that's where you can get these big swings in markets. And I think that's where we're running into. It's this next year, in my opinion, is that's when credit becomes a problem.
Yep.
Well, I think it's all comes down to the consumer, I think, because consumer runs 65, 70% of the economy. People lose their jobs and money
Paychecks.
doesn't go into the 401ks, and
Paychecks.
people start worrying about their houses and losing their cars and all that. That's when it's gonna, that's when it's gonna equalize with the market. But the
Yeah.
market's gonna, markets are illogical. They don't match the economy. We've been talking about that for a year now. But again, there's
One
trades out
thing,
there. You look at our trading list, and we're trading well.
yeah,
Was there any
yeah, and
comments
it's
from the Fed regarding, coming into lower rates at a, quicker, or any comments? You guys hear anything from the Fed?
I
I
think
heard from the Fed,
how,
didn't they talk about mostly liquidity squeeze? That's what
well,
I was talking about.
he was talking about stopping the taking down of the balance sheet, didn't he? Say something like that. He was going to slow
Mhm.
that down or something.
QT.
Yeah.
But he also talked about that they're feeling pressures on liquidity.
You hear that word a lot these days. Liquidity.
liquidity. What do they mean by that? That's interesting.
Yeah.
Check your bank account.
Gee,
Yeah.
wow.
Look
Just
at your
put it on
bank
your
account.
credit card, Bob.
How much cash you got
Bob,
in there?
just put it
No
on your credit
cash?
card.
We have a couple
Yeah, but
comments in chat. I'm interested in adding a short position. Which regional bank would be a good choice right now? I don't recommend shorting that much, but looks like you can take your choice right now. Yesterday's charts, everything was down, but I'd be careful
well,
on shorts too.
and
Go ahead.
that's something to take in account. Jason Shapiro is really teaches that. He's really good at that. He has it's called the Crowded Market Report, and he talks about gold. He talked about gold this week or last week, and he's like, I want to short gold, but it's not, and everybody is just
Too
crowding into
strong.
it. He says, but it's not crowded enough. And that's when the professional short sellers get into something. I look at Nvidia and I go, it's not crowded enough. There's not enough people in it. And it seems like it would be, but I don't think it is. And I think when you get to that peakness in a stock, you look at what happened to Zion, you look at all these others, those things have got deleveraged yesterday. So if Zion were to jump again, and went through its uh its ceiling in the last, couple weeks, and you see just everything become peachy again, that means that trade is becoming crowded. You want to find where things are just people are constantly piling into it, and most specifically the retail investor is crowded into it. And when you see that, that's when you can make money on a short position. But in my opinion, this regional bank thing, that got deleveraged. That's not crowded enough. You want to see that get really crowded, or an index get really crowded with everybody just going, yeah, it's still going up. It's still going up. Think about the housing trade. Uh, you know, Back in the day, it wasn't until really '08, beginning '09, that trade got so people got so like housing was not going to break, and then it broke, and that's when markets failed, and that's where big short sellers made a shit ton of money. And so I think that's, you know, I don't think I would just be careful on the short side, but it's Jason Shapiro does a great job explaining that. And he used gold as an example where he's like, I want to short it, but I know it's not ready yet. There's still more to go. And that's
I'm
what
in,
you want.
I'm
The
in
one
gold and
before you.
silver. They're trending up nicely, those metals.
Yeah.
They
Gold,
are.
and-
They're,
yeah, beautiful.
We watch them every day, guys. We bring them up on the charts, and yeah, silver's been good and gold's been good. Make sure you have your stops in, so when it turns around, you take your profits. Yeah,
here,
you
here's here,
can't beat the trend of those two.
Yeah,
here's a good indicator. When 60% of the people on this call say they're in gold and silver, probably consider shorting it.
That's
I
not
mean,
financial advice, by the way.
that's not financial advice, but
Everybody
that's the,
raise their hand if they're in gold and silver.
I'm in silver. I'm in silver. But
I'm in both, so
here's another comment. So if we're seeing a possible market crash coming, this is from Divyash. What percentage of our investable amount should we keep in cash? Also, I believe in November and December, markets go down as everyone is on vacation mode. Is that correct?
bonus month. You
Um,
see
and
that,
it's really up to you and what
they're
your
in
risk
spending mode.
tolerance is on, yeah, on how much cash you have. Bob, are you still all out, or you?
No, I creeped in. Um, I bought a couple of things, but then I dumped a few things. I'm maybe 10% in. I'm not anything significant.
Yeah, it's hard to know. You can't really time. If I'm in, you're talking about an investable
The
account.
buying is not good enough yet. You know, the couple of things I bought are reasonable. I caught gold yesterday before it went up $9. So I picked up some GLD. Um, but I'm at a profit with it now. But I think that a lot of the tech stuff has to come down a little bit, for there to be some margin involved because they're so high.
yeah.
He's talking about investable. The best he's talking about investable uh, account. So for me, my investable stuff that I've been in for a long, long time, I'm certainly not getting out
Oh,
because
you're talking about long term?
that's what it looks like in his.
Uh,
Yeah,
like I tell everybody, I'm not married to anything, so I don't believe in
except
long
your
term.
wife, right?
That I do believe in.
Okay, all right. I just want to make sure I'm covering your ass in case she's listening.
40
So,
years now, so
yeah, good for you. But I have long-term stuff. My cost basis is so low on it. These little swings don't, 10% swing doesn't bother me on investables, and you can always use the 200-day moving average, and that's the simplest line in the world for in and out of investments. If you want, go. We've talked about it a lot. We've gone back and looked at charts, and um, I mean, if you're in the S&P or the Qs right now, you're above that. If you're in the mags, you're above for most part the 200-day, and that's been a good gauge for me to use. Not financial advice, but it's something that at least is part of a plan that you could look at.
and by the way, talking about shorts, shorts are the type of thing, if you're gonna play that, you gotta watch it every day. You gotta live it.
Mm-hmm. It's
Like you
tough.
just
You can lose a lot.
you lose a lot of money very quickly if things change.
You saw it. This year and last year, you saw a lot of professional short sellers shut their funds down, and it tells you something about how that short market hasn't been working. Now, will we see some of those sprout up at the beginning of the year? Maybe so,
Sure.
but shorting stocks in the last 3 years has been really rough because this market has just been liquefied. Now it's becoming, they want to see, when once again they want to see euphoria, they want to see everybody piling in, and we haven't seen that for a long time. So when it
Well,
comes
Bob
to
didn't.
just super crowded,
Bob didn't buy this boat I'm sitting on by shorting the market. He bought it with gold and he bought it with silver.
there you go. So I
Uh,
think when
you
it
know,
comes to timing the overall long-term investment, I think it comes down to your time frame. If you're 65, you become more conservative, especially at this point in time. Buffett is a prime example of somebody who's a little older than 65, and he's become very conservative over the last year with how much cash he holds. Um, he'll be okay. So in the long run,
It'll be
and I think
okay if he
that's the
lost 25%. It'll still be okay.
Yeah.
yeah, exactly. But I think a lot of this comes down to individual time frames. I'm 56. I figure I got another good 10 years ahead of me. Um, if I risk manage it right, I'll be okay. But if I'm in my 60s or 70s, you don't have 5 years to recover from a 30-40% drawdown in your portfolio. So you preserve it. You think outside. If you're a short-term trader or intermediate term trader, yeah, you could take a little bit more risk, but once again, this is not a game about losing money. It's about making money and most importantly, preservation of capital. So
That's
we're
why you
just
have a,
in a
that's why you follow a plan, follow a plan.
But also
yeah,
these gains are historical gains, right? These are
yeah.
gains I believe that many have never seen before. I mean, I made so much money in the last 2 months. It's I've never done it before that well. It would take me what I did in 2 months would take me a year, maybe more.
Yeah. I,
And
I
that's
Good
un,
job.
honestly,
that's
I
Good
unusual.
job, Bob. Good job.
I
Thank you.
know
And that's
Thank you.
unusual. That's not the mean. That's unusual.
no. Well, I posted this on the Discord a couple days ago about when is enough. And this was in reference to the tell sheet 12. Since June at the time, I believe it was up 98%. 98%. That's ridiculous. That's crazy. And
What's
and that's where I
98%?
look at this, huh? What's
What's
that?
98? I'm sorry, what's 98%?
When I introduced the tell sheet 12 in June 16th of this year, it's up 98% since that time. That's that's crazy. And that is not real. I mean, that is
Good,
not
good crazy.
historically real.
Good
So
crazy.
when I look at this and I go, if you're up that much in a position, I've heard people say on Kerry's call, they're up 300% in a company.
Sell
What
it.
about being down 10% within a week? I mean, that's the kind of
I mean,
thing.
take your profits, man.
At
Yeah,
least
I
take
agree with
half of
Bob.
it off the table.
Just
Take it
take it.
half of
Yeah, the game's about
take it.
making money, not falling in love with a
Yeah,
stock and losing it.
That's why
yeah.
2 Fridays ago I sold everything because I took all the money off the risk table and moved it to just cash.
Sounds like a
And
casino. He's moving his arms. He's moving all the chips, taking
that's
all the
right.
chips.
That's right. Exactly. Because at the
You
end
put
of
it
the
in the
day,
safe.
you put it at risk, you're gonna lose it. And right now is a time where if I didn't, right, the week after, I would have lost a bunch of money. Okay. And I timed it so well. I'm surprised I even at myself. But, you know, I just lucked out. It was just perfect timing. And the week after, all the stocks that I were in took hits, starting with App Lovin'. Okay. Um, so sometimes you hit it, sometimes you don't. It's like going to the casino, but you got to take your profits. You just can't sit in there.
Well, and
We want to ride in
that's
a
the thing is
Cybertruck.
you look at this, you look at what happened yesterday. That was not a surprise to Wall Street. They knew. They knew something was coming. And they knew in particular those banks. And somebody made money on that on shorting those two stocks. But that's the thing about Wall Street. There is so much chitter chatter
Yeah, they know what's
between
going on.
the nose. They know what's happening. It's us, the retail investor, who catches it, you know, on the
Did you catch?
chin.
Did you catch Jamie's message? If there's one cockroach, there's more.
Yeah, yeah. And the thing
Hello,
is,
that's a
he's
message.
no he's known about that for 9 months.
Yeah, yeah, and he's telling you there is more. Wait,
Well,
there's more.
there's nothing that goes on in the global banking community that Jamie Dimon or Larry Fink don't know about.
Oh yeah, yeah, they
Or
know what's
Monahan from Bank of America. Oh, those guys all know.
yeah, the big guys, HSBC, they all know what's happening.
Yep.
Yeah.
Trent
So
Greenway.
I'll tell you a story. Yesterday, I had a couple of contractors in to do work in my office, change floors, change some offices around. And I had a conversation with them, and these guys have been in business 30, 40 years. Okay, they've been around a long time and they have a customer list. And my point to you is that the flooring guy does about $2.5 million typically a year for the last 5 years. This year, he just passed $1 million in sales. Now they have a client list, commercial, right? And housing, not talking about the homeowner, I'm talking about multiple housing units. And that's how far they're down. The drywall contractor told me that he is 50% of his annual revenue. So, and their guys aren't working and they've laid guys off. So my point is that this is also another part of the economy that is falling apart that really hasn't shown in the market yet. This is when contractors go get jobs or their workers go get jobs at Home Depot and Lowe's and find other avenues of revenue, or they're driving Uber or whatever they're doing. But this is still to hit the market. This hasn't really hit the market yet.
I agree.
Yeah, I think I mentioned this week was it isn't the publicly traded companies that we see every day. It's what you're talking about, Bob. It's the private business
Privatized.
owner,
Yeah.
who doesn't get a microphone to talk into about what's happening in their businesses.
And
And
we
that's
make up the revenue, the small businesses.
Absolutely.
yeah.
And also
That's
we're
what
the
this country is built
biggest
on.
employers, right? We're the biggest employers.
In aggregate, yes.
Yes, in aggregate, yes. And there's a story in the Wall Street Journal today about how small businesses are being crushed by the tariffs. I would agree with that. There's a lot of businesses going out of business because they can't afford to stay in business anymore.
But we won't see that for another quarter because we
Or
don't
maybe
report that.
or two.
Or we may not see it for a
Two.
long time because the government isn't reporting any of that right now.
That's going to show up.
Not what I believed it the first time.
All that's going to show up in the jobs, because as businesses close down, they lay off their people, they come off payroll, and unemployment's going to increase. And then all of a sudden, you're going to see a snap in unemployment. And
That brings me back to my original point when I started, is if the consumer starts getting worried and doesn't spend, that's when the crap is going to hit the fan, because they're not spending.
I believe that's already happening. It just hasn't.
It is.
It hasn't happened on a large scale yet. It's working its way into the system.
But it's not going to happen to everybody. If you have planned your life out and you have done well in savings and investment in assets and business and all that, and you have low debt or no debt, you'll be okay. If you're in total debt, you're not going to be. And
you're going to be in trouble. Yeah,
you're going to be in big trouble. Yep, and that's the way it always is.
Yeah, you can't service the loans.
Right. It's like the regional banks.
Yeah, they're in trouble.
Yeah. All
right, gents, I gotta go.
Everyone have a good weekend. And we'll see you at 3:00, right? Kerry's 3:00.
Yeah, Kerry we'll have Kerry's 3:00. We hope to see you there. And in the meantime, have a good morning and afternoon. If you can't make it at 3, we'll see you on Monday. And once again, thank you for all your support and encouragement and your ideas and your fun-filled banter every week. So we'll wrap it up there. Have a great day. Live loud, always.
Live loud.
We'll see you guys. Have a good one. Thank you.